Here is the number that should stop you in your tracks. Today, Wednesday the 5th of August 2026, Bitcoin is trading around $63,956, up a modest 0.89% over 24 hours. On the very same day, the S&P 500 has closed at a record 6,528.81, after adding 185.09 points, or 2.91% in a single session. The Dow gained roughly 1,000 points to its own record high. And yet Bitcoin still sits about 49% below its all-time peak. The asset sold to the public as digital gold is going nowhere while traditional shares print records. That divergence, not the price tick, is the real story. So what changed? Two things: oil and the Federal Reserve. Optimism is building that the United States and Iran are close to a deal to reopen the Strait of Hormuz, the narrow shipping channel that carries a large slice of the world's seaborne crude. That hope has pushed oil back below $80 a barrel after an 8% spike rattled traders earlier in the week. Cheaper energy feeds directly into lower inflation expectations, and lower inflation expectations are rocket fuel for shares. Strong corporate earnings did the rest. Bitcoin, by contrast, has been pinned down by nerves ahead of the Fed's rate decision. On Monday it actually slipped, trading near $62,800. In practice, this is a market rewarding cash flows and punishing hope. Ether has been sluggish around $1,858, and the wider digital asset complex is essentially flat. Gold near $4,000 an ounce tells you investors do still want protection, they are simply not choosing Bitcoin to provide it. Confidence has taken knocks elsewhere too. A reported exploit affecting cold card hardware wallets is a blunt reminder that holding your own keys carries technical risk, not just price risk. And the Hormuz situation is real enough that Bitcoin-denominated insurance cover for ships crossing the strait has been floated. Miners, meanwhile, face squeezed margins while prices stay stuck. Where does this go next? The near term hinges on two binary events. First, the federal. If the decision and the language around it lean towards cuts, expect risk assets including crypto to catch up quickly, because Bitcoin is unusually sensitive to the cost of money. Second, Hormuz. A signed agreement would likely keep oil anchored below $80 and extend the equity rally. If the talks collapse, that 8% oil spike comes straight back, hitting shares first and crypto harder. Watch the correlation carefully. While Bitcoin currently refuses to follow equities upwards, history suggests it still follows them downwards. That asymmetry is exactly what makes today's setup uncomfortable. The takeaway for today is simple. A flat Bitcoin price alongside record equity highs is not noise, it is information. It tells you money is flowing towards earnings and away from narrative, and that Bitcoin is currently behaving as a high beta risk asset rather than a safe haven. If you hold it, judge it on liquidity and interest rates, not on the story you were sold. If you are watching from the sidelines, the two things that matter this week are the Fed's decision and any Hormuz signature. Everything else is commentary.